Hello, sir, class. This is Cadet Shovan. I'm in Group One, Section I, and today I'll be briefing the first problem of Chapter 12 problem set. So this is our given problem. The following balances are available for X company. The assets are given: cash, accounts receivable, inventory, prepaid rent, land, and accumulated depreciations. And right below that are the liabilities and owner's equity, that's retained earnings for 2 years, 2016 December 31, and the recent year was 2017 December 31. Bonds were retired during 2017 at face value. Plant and equipment were acquired for cash, and common stock was issued for cash. Depreciation expense for the year was 35,000. Net income was reported at 26,000. Now, before I move further ahead, we need to know some of the key terms here. What is accumulated depreciation? So accumulated depreciation is the cumulative depreciation of an asset up to a single point in its life. Accumulated depreciation is a contra asset account, meaning its natural balance is a credit that reduces the overall asset value. The second thing we need to know is face value. The value of a coin, stamp, or paper money as printed on the coin, stamp, or bill itself by issuing the authority. Depreciation expense, the amount of an asset's cost that has been allocated and reported as an expense for the period, maybe year or a month, is shown in the income statement heading. Now, what's our requirement? The first requirement we have for the problem is prepare a statement of cash flows for 2017 using the indirect method in the operating activities section. We need to know two things from this requirement. The first one is statement of cash flows, and the second one is operating activities. So a financial statement that shows how changes in balances, in balance sheet accounts, and income affect cash and cash equivalents, and breaks the analysis down to operating, investing, and financing activities is the statement of cash flows. For indirect method, a method used to generate cash flow statement that uses increases and decreases in the balance sheet line items to modify the operating section of the cash flow statement from the actual method to cash method of accounting. Now, to solve this problem, I'll take you down to an Excel sheet. So in this Excel sheet, I have taken into account the assets and liabilities from the prompt for the year 2017 and for the year 2016. Now, first I found out all the net changes for the assets and liabilities as for both the years, December 2016 and December 2017. So this is the accrual method. In accrual method, to find out the change in asset, you deduct the asset of earlier year from the asset of recent year. So say for in this case, for cash, to find the net change of December 2016 to December 2017, we should deduct 10,000 from $8,000, and we get a net change of $2,000. So we'll do the same thing for all the asset items. So that means cash, accounts receivable, inventory, prepaid rent, land, plant equipment, and we'll find the net changes accordingly. Our plant and equipment, the net change was $100,000, and that was our purchase. However, for accumulated depreciation, we should do the other way around that we did for our assets. That means we should deduct accumulated depreciation of recent years from the accumulated depreciation of earlier year. That means 65,000 is deducted from 30,000, and that gives us a negative value of $35,000, and that's our depreciation expense. For our liabilities and owner's equity, it's the opposite of the assets. That means we should deduct the liabilities and owner's equity of recent years from the liabilities and owner's equity of last year or earlier year. So that means we should deduct 12,000 from 10,000 for accounts payable, and then we'll deduct 3,000 from 5,000 for IT payable, and this will give us all these values that we found out. Say for accounts payable, we found out $2,000 in negative amount, IT payable positive $2,000. For ST notes payable, it was $10,000, which was our issuance, and then bonds payable was our retirement, that was $25,000 in the positive value, and the negative value for common stock, which was also our issuance, and our retained earnings was a negative value, that was net income. So now as we go over this was our accrual basis. Now we are trying to convert this into our cash basis. So as the prompt asked us to find out the cash flow statement for the operating activities, now moving forward, the right portion, the one that is in the white portion, this is our cash flow activities, and this is our accrual method activity. So our net income was $26,000. To remember one thing is that the values of cash flow statement should always be opposite to the values of the accrual basis. So as you can see, that net income was $26,000 in the negative value, but here in cash flow statement it is $26,000. So to help you understand, I highlighted all of them in colors and matched with them with the accrual basis of accounting here. So for net income, it was our $26,000. Depreciation expense was $35,000. So going to the accrual method, we find this here, $35,000. That's in the negative value, but here it's positive because it should be the opposite of the accrual method. Increase in accounts receivable was $5,000. Decrease in inventory was $10,000. Increase in prepaid rent $3,000. Increase in accounts payable $2,000. Decrease in income taxes payable $2,000. Now, if we add all of these together, including net income, then we get net cash provided by the operating activities, and that's $63,000. So, as the question asked, to find using the indirect method the operating activity section. So this is how you do in the operating activity section. To go further from this, I also found out the cash flows from investing activities. So our investing activities was only plant and equipment, that was our purchase, and that was a positive $100,000. That means in the cash flow statement it should be a negative value. That gives us a negative $100,000 here. And for the cash flows of financing activities, as you can see, like all the notes payable, we have a negative value here, so it should be the opposite, and it gives us a positive value. So say for bonds payable, it was a positive $25,000. Here is the negative $25,000. Issuance of short-term notes payable was $10,000 in the positive. Issuance of common stock was positive $50,000. Now, net cash provided by finance activities, the way I found out this was I added all these payables, that is bonds payable, notes payable, and the issuance of common stock together, and that gives me a positive amount in $35,000. The other thing that I found out was net increase or decrease in cash, and it's a decrease in cash, and that is of $2,000. The way I found out is I took the cash balance from 2017, that is $8,000, and the cash balance of 2016, that is $10,000. And then I deducted the cash balance of 2016 from the cash balance of 2017, and that gave me a negative value of cash. That means we are losing money. So now going back to our second requirement. So our second requirement was, did X generate sufficient cash from operations to pay for its investing activities? How did it generate cash other than from operations? Now, if we go back to our Excel sheet, so we see that the cash generated from our operating activities was $63,000 right here. However, the cash spent from our investing activities was $100,000. That means we are spending more than we are earning. So that means we did not generate enough cash from our operations. The second thing was asked was the additional cash flow that was coming. So the additional cash needed to finance the acquisition was raised by issuing a note of $10,000. So we see it right here that we have issued a short-term notes of $10,000, and the other one was issuing common stock of $50,000, which is right here, this one. So these are the other two categories which helped us in issuing our cash. That was all for me. Thank you very much. I hope this helped you to understand.